Good morning. Happy Friday. It was a big week. After the gap up, we really didn't go much of anywhere, but it is new all-time highs. And so it was a big week from the, I guess, perspective of breaking out of this range. Now we will see how long it can stay above the range. And yesterday was a relatively good appearance of buyers stepping up on the dip where it looked like it was going to be a red day. It was from the perspective of just closing below the open, but we've got a bottoming tail bar. So we've got the last 4 days, just a gap up and going nowhere. From that gap up and close, we're basically, I guess, just up a little bit, give or take. You can see, the closing price right there. And, went up, came in, went up, jiggled around. And yesterday, jiggle, tried to go down again, lower, low bar, lower, high, lower, low bar, but a bottoming tail bar. So if you were to view this and just say, you know what, heck with all these candles and tails and dojis and so on, and you put a line chart on here, think about what you'd see. If you have any concerns, I guess, about the market, and we have talked about the internals, right? And that's probably why, in part, why the market is, doing what it's doing, as far as, consolidating here, working off that little bit of overzealous buying of call options versus put options by the wrong way option traders. But, we do have, a market that, from a weekly perspective, pulled back to the bottom of the range and pushed up through the top of the range. So we've had, 4 weeks of moving higher in a choppy fashion. And now, unless today turns into a rout, we get a new closing high above this range on a weekly basis. And that's a positive. And ideally, it'll close above its opening price, and this candle will be green. Now, if it closes around this area, without having to know names of candlestick patterns, we just simply look at that as momentum's just slowed down. Came to a screeching halt, actually, because you've got a narrower range candle with a candle body that is, it's not a doji by definition, but the open and close are about the same. So, as I said, we don't need to know the name of anything. We just read this as momentum slowed. Over here, things got wild and whippy. Right? But as things were moving lower, intra-week, it plummeted and then came back, and we just look at this as momentum slowed. And over here, it was an inside week, give or take, and then momentum begins to pick up a little, and now it's slowed. Now, what we have to look for next week is, one of the things that we look for is that once prices take out a high, by what degree do they take out that high? Meaning, how far does it move above the high before it forms a red bar? So this is just a little slight move above the high. If next week we get a red bar here, that's not going to break the trend, but in reality, it's too soon. Right? So it puts this trend in question when prices just peekaboo above a high and immediately turn around, similar to what we saw here. Right? Not exactly the pattern, but the idea is the same. Made a peekaboo new high and immediately came back in again. That traps longs, and they don't like that, of course, because that now puts into question the money that they've put at risk. If it starts going down, those long positions start turning into losers. And then, well, where's your stop? Did you go 2 bars back? Did you go 3 bars back? Did you put it under the pivot? Did you share size it accordingly? And that all comes into play. Whereas if that red bar turns into another red bar, things can tend to start feeding on itself. So we'll see where this ends at the end of the week. And then we go into starting a new month today. So we get the beginning of a new monthly chart, and we'll see what the this month ends up looking like. Let me just get rid of the lines here. And without knowing what this is going to look like at the end of today, let's just assume if this would be it, that would be a pretty darn good looking monthly chart. Meaning it's been in an uptrend. It's been in a choppy sideways consolidation for several months. The beginning of the year is where the move happened. And then here's the red bar ignored. Right? We talked about this yesterday in the MT Live. And now we have this month of October ending with a bottoming tail bar that tested the range and is closing at the top of the range. So while it's a wider bar, right, maybe it needs a little bit of a rest at the beginning of the month. We'll see. The wrong way option traders have backed off a little bit. As you can see here, as of yesterday, they started getting a little nervous with the chop and the down move that happened yesterday, but they are still not out of the woods here. So this, you see the breath. I've been talking about this really anemic breath here on this move up. Breath went negative yesterday, and it was just flat during this move up here in sideways consolidation. So not the kind of power move that we want to see, pushing up to a new all-time high. So now this is neutral. Our breath is neutral, and maybe this needs to come down to at least a neutral level to kind of get us to where be more comfortable, where if it's a pullback, or even better, if this goes sideways and this turns down and it's still hanging up there, and we get a relative strength versus the internals, where the internals work off this, that could be really bullish, and then we could be off to the races to the upside. So we're still as we always do, looking at what is and how things develop, and just looking at things in our simple way of just saying, is this trend up? Yep. Is that trend up? Monthly? Oh, yeah. Is this weekly trend up? Yes. What is this hourly trend? Well, now it's sideways. We got some indecision there. Well, all right. So we can deal with that. We got a trading range, and we're at the top of the range. Yesterday, we got to the top of the range, we went back down, and then we came back up again. So now we'll see what this does here today. But overall, our bias is that prices are going to continue to go higher, looking at these S&P 500, but we need to work off a little bit of what the wrong way option traders, as they got all in up here at the top. They get slapped around, as they always do. Things get choppy, and but taking a step back from that short-term view of what's happening within the markets, things are still looking good. Qs looking good. It couldn't get through the high, but we have a similar situation. Uptrend, not far above these highs. Momentum is stalled. Trading range in today, top of the range. I don't know what can drive this higher here. We'll take a look at the futures right now. And so we've got what Dan calls the beginning of a bear sandwich, depending on where this closes here. They're not that big of bars, but the bodies are covering up, like we call this is the big, well, let's just call it an Italian sub. And you got that meat in the middle, and here's the backside of the bread there, engulfing that bare bar. And so if this closes like that, then the expectation is that this uptrend, which it is, will follow through to the upside. Right? Uptrend, new highs, up at the top of the trading range. There's going to be sellers there. Let's see what it does. Qs. It's pretty much the same thing, right? We kind of call this a Christmas tree pattern sometimes. Green, red, green, red, green. Now, narrow day so far. It's, the beginning of the day. Same old trading range, same bars that we're looking at. Things kind of moving in lockstep with each other pretty much. the bias is that, look, if it can clear that high, it's going higher. If it breaks below yesterday's low, look for some downside, but that's not going to violate the uptrend. Dow, been the laggard, trying to catch up. Breakdown failure, though. Buyers are stepping up on the dip. Right? Breakdown below the base and immediately recovers. Think about, what does that tell you? Right? The laggard is being bought because the belief is the laggard is a good place to put money, where it's going to catch up when the winners start to lose some momentum. That doesn't mean they'll go down a lot, but the concept of playing catch up is a powerful one, whereas you see what's strong and it reaches resistance, and then you go look at the bottoming pattern in the dog that's showing early accumulation. Right? We did that in the Russell. I don't remember if it was yesterday or the day before yesterday. I think it was the day before yesterday, and that worked out well. So, knowing when to go pick up the dog is a powerful concept. Right? And you look for patterns like this little rounding bottoms and downside shakeouts and so on. So they're real close to making a new all-time high. And of course, we want to see the Dow itself that's followed by the media actually doing that, so that they can, put the party hats on. And so recovering a little bit from yesterday's down move, and we'll see what today brings. It is Friday. Right? Russell got whacked pretty good yesterday compared to the others, but look, the dip was bought again. Right, 12 o'clock, the dip was bought, and it's coming back up into this resistance area. So I would think, unless some news comes out, the upside is limited here today. It may be a good day to call it an early day. We'll see how things shape up here by 11, 12 o'clock. But it just may be a choppy consolidation day, waiting to see what happens. The new news on China, maybe they don't believe Trump. It's all a bunch of BS, honestly. Just looking for, I guess, positioning, get the best deal. You can't blame them for all of that, but it's the way it goes. So anyway, I think just looking at this chart, this kind of a pattern historically isn't one in which you get a giant bar clearing highs like this, unless there was some big news event, and that probably would happen at the open, and it would happen from a gap up more likely than where this is at, pushing up into this bar here. So I'm going into the day looking like today might be a choppy consolidation day, but we'll see if some events work out. But for those in the room, we're going to be following Quick Draw McGraw with a Iron Condor, probably on the SPX. So with a 0 day to expiration, and that might be the beautiful trade of the day. So looking at that, I would say if there's some premium up maybe at 30.60 and down below 30.20, give or take. We like to get as far away as possible, but above, maybe we don't even have to go to 30.60, but let's see if the markets go down in the first 20 or 30 minutes of the day, and push down into yesterday's range, where this top area up here could be a safe place where things would trade within this range. We'll take a look at it when the trading starts. Oil back down to support. Buyers stepping up. All right. Support and resistance. Look to the left. Things starting to turn around here. We'll see if that can survive. Bonds backing off a little bit. This was a good tell for us yesterday for a short in the futures when these started popping higher. Gold was pushing higher. Markets pushed down, and then later on they turned around. Okay, gold looking good, looking better. We're going to get a weekly bar, possibly, right? Not the end of the week, but a bottoming tail bar, which is looking good. I've been talking about this for a couple of weeks. This move, probably more than a couple of weeks, maybe a month or so, this move toward the 20 MA and this level here to form a pattern, right? To resume the move higher. And yesterday, gold had a good day. Markets are up a little bit, so they're backing off a little bit. So I think today is probably a decent day to buy the dip, if that is of interest to you. Looking for this to eventually start picking up some steam to the upside in the next week or two. And silver, probably about the same story there. Yep, you know, different pattern, but you can see it's down here as the market has shown some strength. And those are Bitcoin. Right? I've never traded Bitcoin futures. I don't. Maybe their liquidity is becoming more attractive, but right, GBTC, I think is the one that you can trade, and something I think is worth consideration to buy on a dip here after this wide range bar. Bottoming patterns often show amazing strength like this, wide range bar igniting, and they often fizzle. So they're not the kind of patterns to be chasing. There's usually never a need to chase. This thing could dump right back down to $9. I'm not saying that's going to do it, but you see the weekly chart is still in a downtrend and it's the beginnings of a turn. So it's something to consider. You know, just bottoming patterns historically come right back down to where they start the most amazing moves. And then that's how they build a base. And as you can see, this isn't a base. It's just a powerful turn. And that's often how it starts. So that's it from me. Happy Friday. Have a great weekend, everybody. Not everybody in the room. I'll be in the room, but those of you on YouTube, and let me hand it over to Dan.
All right, good morning. Yeah, I think Friday is my most favorite day to trade also. You know, because of option expiration, it seems like people are more in a good mood, definitely in a better mood Friday than than Monday. All our opens are fine, so I'm going right to gappers. Well, actually, Goldman Sachs is our only open, and the weekly options trader right at the low. We covered half yesterday at over 50% of max profit, and I tightened the stop, so we'll just 5-minute high. We'll get out of the back half for a profit also. McGraw, yeah. So I'm actually favoring the put side on the spiders here today. They're holding incredibly well pre-market. So that's my bias so far is put spreads. FACAL, I guess it got launching here, and the journal said they have a merger going on, but no pattern, and it's an ADR, so I just move on. GDX, Greg talked about. We're going to be monitoring an entry for that for our ETF service. CAR under 27. That's an ugly gap. Wow, under all of this mess. It's a call spread candidate, and if it holds, maybe even Condor, McGraw. Fit. Oh, yeah, it had news pending. All right, so that thing got going on the rumor that Google is it Google gonna buy them? Did the news come out? Because that's sure acting like what's favorable news there. Bought out. Was it Google? Newell, 1955. Oh, well, then I have no interest in that if it's a buyout. 1955, gap in resistance, no pattern. Remember, as always, I'm looking for tier 1 setups, which are multiple time frame alignments that should be ready to go within the first 5-10 minutes. CBX, oil, mess. I got no interest. You're gone. BCC. Oh, McGraw gave me this one as a candidate for unusual option activity. Hey, and by the way, even the folks on YouTube and Green Trading Room, go to our Master Trader Facebook page, and I posted a diagram of the Master Trader buy setup because I'm starting to work on an MT live for that, and I want you all to give me your very best high probability buy setup by the weekend, and then the winner can make it a little contest. We'll just give you a month of the weekly options trader. $1.29. This is a penny stock toy. And I said I don't mind trading penny stocks provided I have a very liquid tradable pattern. And who knows, if you get a little double bottom on this thing, buy 5,000, 10,000 shares, that might give you a good day trade setup. 578 bullish gap, but it's a mess. That thing's been all over the place. EHC $69. Wow, talking about a shock. Look, all the bears for the last 3 days, it's gapping over that. That's a big gap, but possibly a 30-minute high. The markets are making new highs right here. Yeah, so McGraw, I'd be careful on the call sides. So I favor the put side right now from what I'm seeing. ANET, what a whacking. It's just, gaps for companies that have been in business for a long time. Wow, look at that chart. Look at this core long. Came out of a multi-year consolidation. This is what we call a wide and whippy. In our basic course, we say that stocks can only move. We talk about a stock market atom in 4 phases. This is 1. This is phase 2, wide and whippy. That's phase 3. This is a monster price void. Even though it's got a whacking gap, that's a short on a bounce. That is a textbook wide and whippy extended monthly chart. Nothing to do with it right now with that big old gap. 3260, nothing to do with that. Cuervo Gold, they make tequila. That's a big old, wow, that's a big old gap to all-time highs, or close to it, whatever, but no pattern. BGNE 170. Wow, there are some monster gaps today. Now that's a monster favorable gap. So that's a buy on a pullback. But the bigger gaps are hard to trade. AYX 9330. You're a mess. I'm just going to delete you because I'm always trying to winnow down my list so you aren't looking at too much. This with last MT live Wednesday, we did red and green bars ignored. Look at all these green bars ignored. Look at this. And then Tuesday, look at this beautiful green bar ignored. That, I probably had earnings, whatever, but that is a beautiful bearish close yesterday. Z-Lab, $36. That's worth watching over the next couple of days. CRC, we already looked at. Oh, no, we didn't. CRC, gapping up to 720, gapping resistance. I have no interest. Baba's been all over the place pre-market. It's gapping right to yesterday's high. But that would be red bar ignored. So McGraw, that's a 30-minute high candidate. We found this one yesterday. I was looking to short a call spread on it. Bearish engulfing in a downtrend, relative weakness. I don't know if that's earnings today, but that's quite a whacking to all-time lows right now. Exxon, 68 bucks. It's a mess. Oil's been a mess lately. X 1230. That's worth watching to see what it does. Man, my girl, I wish you would not do that. Scares me. That's a bearish gap on STX. Call spread candidate, 15-minute low. Baba, we looked at. Okay, so I'm done with my gappers. T-Doc, we did a put spread yesterday. Light, I cap on my list. Wide gap, wide range. You know, I'm not chasing it. ABMD, I would love to get an inside day today, and then I will put that in the letter as a 1, 2, 3 continuation. That looks fantastic. I think McGraw sold a put spread on it yesterday. Visa, you know, maybe a 5-10 minute high. I want to see, you know, what the futures are going to do here. And it's just my trading plan. I don't trade in the first 5 minutes. So that's a beautiful gap breakout, but it's extended on a 15-minute chart. So the time frames are not in alignment for, you know, a new long entry here for even me selling put spreads. And there's a ISM number coming out today, right, at 10. So I, you know, remember that was a big number recently that sent the market into a big old tizzy. All right, Goldman is against us. So it gapped over our stop. So we use a 5-minute high. T. Is that Mr. T? Or is it Lipton tea? Lipton, right. You know, I used to watch that show as a kid, the A-Team. T. Yeah, I like the weekly. Look at this. Wait, oh, what was I just looking at? Oh, that was a V. What was I looking at? Look at this W from yesterday in my little window here. Wow, that's still pain. Oh, look, Uber Dog. We were trying to do a call spread on that yesterday, and there was no juice. Let's look at a couple